Hey traders, Raghee here. One of the number one questions I'm getting is, Rag, is this a downtrend? Is it time to short? And what do we do from where we are right now? One of the problems with a sell-off is that, well, we don't want to just randomly buy weakness because we could just be stepping out in front of the freight train. But as a short seller, we don't want to short in the hole, as it's known. In other words, we don't want to short into new lows because if the momentum reverses or doesn't continue, we're stuck with a losing position. So it's a tough spot. The fact of the matter is we're never going to veer from what we always do, which is number one, start with the market structure. Now, market structure can be measured many ways, and I'm sure there are many other processes, but of course, we've got to work with what we work with. And for me, that is the 8, 13, 21, and 34 EMAs. Most of you know that via the trade flags or the multi-trend. The multi-trend is still neutral, gang. As much as we've sold off with 3 very distinct candles, Jackson Hole, CPI, and then the FOMC, this is still a choppy market according to the 8, 13, 21, and 34. So everything I'm going to tell you is predicated upon still dealing with a choppy market. And that chop can be probably defined by the mid-August highs and the mid-June lows. So if we're looking at the range, yeah, this is probably it, right in there. Right? You can see that Darvis level here, see the Darvis level there. There's your choppy range. So to be a buyer at the top of the range, not a great idea. But to be a seller at the bottom of the range, equally not a great idea. So what are we to do? The thing that we can do is look for patterns that could give us a heads up to a reversal within the range, not a trend reversal, just a pattern of reversal. And that's exactly what we're getting here. So I'm going to show you the pieces that are helping me determine whether or not there could be a buy forming. Today we have the beginning of a minor low, and that minor low is a pattern that has a lower low than the previous candle. Tomorrow's candle, the soonest we could even think about this trade, would be tomorrow, Friday. That means that we do not trade lower than 37.63.5, which was today, Thursday's low. We need to trade higher through 38.33. That's today's high. As long as we don't put in a lower low, and if we can take out today's high tomorrow on Friday, we have a potential minor low breakout setup. I'm not saying that's the inception of the uptrend. All I'm saying is at that point, we could retrace some of our steps, likely to some near-term resistance between 3,900 and 3,920. The other reason, and this would be sort of the final piece, if you will. So remember, market trend, pattern, and then what's the third thing that I'm looking at? I'm looking at my V-score. Everything I've talked about up till now is predicated on price. Moving averages, exponential moving averages, those are predicated on price. The pattern I'm talking about, that's price. But what about volume? Volume tells me where the commitment and the attention in the market is. When I take a look at volume, and I'm going to show you here the level that I'm looking at, the last time that the V-score, now the V-score is the standard deviation of the volume weighted average price. The last time we were in this area was this low right in here, that mid-July low. We're approaching that mid-July low. And like anything else, if I've got a horizontal support based on price, there's support and resistance in indicators too, and we're approaching one of those. This is where I'm looking at support and that pattern holding. Now, what if we're going to keep moving lower? Really easy, gang. If we take out tomorrow after 9:30, today's low, this pattern is no longer valid. So we're not stepping out and making an assumption about the buy. We're confirming a choppy market, volume support, and a potential pattern that would give us the trigger. That's the way that I'm looking at any number of choppy markets, the pattern, the environment, and the confirmation by way of volume. We can do this in the NQ, we can do this in the ES, we can do this in any choppy market. So keep an eye on the market structure. Do not do this in downtrends, right? If we have a red trend, that's not where we're going to do this. Focus on choppy markets and take a look at volume. This V-score could really be a huge piece of where this support and this pattern may trigger the long. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.